Hey, welcome back. It's been a crazy week. I'm going to shut this off. I bet you don't know, but I'm actually in my office right now, my office in Willow Glen. I took up a meeting room so that I can be here because I was in another meeting and I had to rush into this one. So here I am. So, a couple things to go over just really quick. I lied. Well, unknowingly, I lied. I've been telling everybody that I've been in this business for 19 years. It's actually been 18 years. Starting December 3rd this year, it will be 19 years. And I will have had my license, my active agent's license for 20 years, December 3rd, 2023. So there you go. Bad math, inadvertent. So I don't know if I'm a liar. I'm just saying that I'm bad at math, I guess. So there you go. How about that rain? Holy moly, that's so crazy. Yesterday, I was driving up in North San Jose up by one of my listings, and we got down to like 5 miles an hour on the freeway. It was scary. It's really scary. On the way back, there were like 3 car accidents. Guys, slow down, especially when it's raining. It's not that you're a bad driver. Well, a lot of you are. Not looking at you specifically, but a lot of us are bad drivers here in California because we're not used to it. Just take the time to slow down and get out of my way so I can go fast. All right. What else? Bet you've been in the news hearing about Feds. Fed's testimony came out today at another 0.75%. Can you imagine that? Why is that? Because our rates are going up to slow down the market, but also slow down the economy. And it's not just real estate, it's the automotive, it's consumer, it's everything. We're trying to slow down the economy, the inflation, because if we don't have that inflation going on, if we can't slow down the inflation, then we're going to be paying $15 for a Big Mac, which we don't want to do. That said, let's go into the numbers. Hang on a second. Actually, let's talk about so let me get to, hang on a sec. There we go. Let's talk about that. Interest rates. Today's interest rates are actually lower based on the fact that we knew that this was coming. The assumption was that the Feds were going to testify and ask for 0.75 increase in basis points. Right? That we expected. And as a matter of fact, we're asking them to do more because the faster we can slow down the economy, the faster we can slow down the inflation, the sooner we can get out of this mess. But, we're trying to do this because it's an election cycle. Everybody has to vote for their people, and people in power don't want to piss off their constituents. And that's why we're babying this. Meanwhile, we have lots of people kind of going hungry, etc. If you look, this is today's rates, right? November 2nd. You hit refresh again, just real quick. This is what we're looking at, right? If you look here, you actually saw last week rates were even higher, 7 1/3. What does that mean? It means people are slowing down on buying houses, not at the same rate as what we were talking about last year. And if you watch these weekly lives, you see the numbers, and I'm proving it to you that people are still buying houses, not at the same clip, not paying over $400,000 or $500,000 or even $100,000 over. They're buying it at or just above. As a matter of fact, we'll go into that, and I'll show you another number that I brought up today. But first, let's bring in Feds hiked the points, the rate 0.75 or 75% or 0.75%, right? That's what that is. That means rates are going to continue to go up. This is short-term money, not long-term money, etc. So if you're looking at credit cards, new car, etc. As a matter of fact, there's a lot of speculation saying that the housing market is being held up mostly because the automotive market is starting to hurt. If you remember last year, uh, people were buying used cars 3, 4, 5 years old for the same price or more as new cars were. As a matter of fact, we were looking at getting our kid or son a new car, well, a used car, a newer car, because his car just kind of exploded on him. So we lent him the money. He's paying us back, not like we give him money. And we found out that the difference between 2018, 2017 Corolla versus a brand spanking new Corolla was like $1,000, maybe $2,000 difference. And, you know, when you're buying a used car, you buy other people's problems, and it just made sense for us to buy it. So we're actually acting as the bank. Of course, there's no percent because we're not trying to screw over our son, but he's still paying us, and he's paying insurance. And for a 19-year-old kid, he's almost 20 this month, his insurance is expensive. So, you know, we got to do what we got to do, right? All right. What else are we looking at? Opendoor. Everybody knows how much I love Opendoor. Not mostly because they're a competitor, but because I don't believe that they're a good service. I think that there's actually a class action lawsuit against them. Talking to people about you can avoid commission, but really there's other costs that are involved that they don't really disclose until it's too late. They don't really disclose the entire process. So in fact, what happens is they take more money than when we help you sell a house. And you really don't know what the market rate, what the market will bear is when you put your house through this system. They're telling you, oh, Zillow's this, Redfin's this, we're going to pay you this, right? And a good negotiator or a good tactician will tell you that we can make more money than that. Matter of fact, they've overbought more houses than anything else over what the value was. And I've seen it every time I look at houses here in the Valley, even all the way up to Sacramento. I saw one down in Gilroy a couple of weeks ago. They overpaid. And now there's one actually in our neighborhood in Blossom Valley that's for sale. And they paid almost 1.6 for it. And now it's for sale for 1.55. And it's sitting on the market. Hence the reason why they're losing or getting rid of 20% of their workforce, 500 people. Is it 550 people? So too bad. We called out Mr. Wu a couple of weeks ago, about a month or two ago, when that class action lawsuit came out. This is just going to be a dwindling thing. This company or other companies like it will pop up when the market gets better, because they always do. Back in 2007, 2008, it was the discount brokers. This time around, you didn't really see a lot of discount brokers. It's mostly because just nobody understands the value of helping you sell a house other than a tried and true professional. They're still there. They're still around, but you don't see them building market share at all. So there you go. Let's see. Fed hikes, rates. Gas buddy, wouldn't you know? 6.27 was the highest in San Jose. Crazy, right? That's for regular. I saw it as low as 4.79. Of course, Hector wants to jump on board, but you know what, Hector? You're just going to have to chill for a couple minutes because I got to get through my news. All right? I'll send you the invite when I'm done with this. We already went through the PDF model. I want to keep this short because I have to go to see the doctor about some old man stuff. One thing I do want to tell you, though, this is important, guys, and share this with people, especially with people that might be renting out. It seems like it might be a good deal to go to Craigslist or what have you. More and more people are screwing people over, saying that they have the ability to rent out a house or an apartment or a condo or a townhouse or what have you. And they don't really have the legal ability to do that, meaning they're not representing them as a property manager. They might claim they are, or they claim they own the house, or they're doing it for their brother or sister or what have you. There's a scam going on, and it's so widespread right now that the DRE, or Department of Real Estate in California, sent out this memo to all of us to say, hey, let people know, let as many people know as you can, and if you can, please do share this, that there's a scam going on. And what they're doing is saying, hey, I am Vito, the property manager for this house. Do you want to rent it? Great. It's going to cost you $4,500 first month, last month, and a deposit. They take that money. Sometimes it's $4,500. Sometimes it's $8,000. Sometimes it's whatever they have in their savings, and they take that money. And they don't just do it to one person. They do it to 2, 3, 4 people. And then the minute they deposit that money, cash it out, that money's gone. So please be careful with that, right? And please tell people about that. Be careful of desperate agents. This is the time when agents, not all agents, especially not all, and not even mostly, it's very few and far between, but very few that it does happen. It happens with every regulated industry. It happens in non-regulated industries. Mechanics got desperate because business is slowing down. Contractors get desperate because business is slowing down. Real estate agents get desperate because business is slowing down and they don't know how to handle it. Remember, I told you I was in the market, in the business for 18 years. The reason why I tell you that is because I know how to get through this transition. I know that this is a short term, could be long term, could be a year, maybe 18 months, but I'm built out so that I'm going to be around for the next 2-3 years, even if I don't make a penny. I want to make a penny or two, but that's the reason why you pay agents that kind of money, because when it's interest only, or when it's commission only, that's the way the business is, right? So I'm not going to walk you through this, but understand that there are certain things that agents are doing right now. They're promising, over-promising, they're skirting issues. There's agents out there that are talking to home sellers that are already under contract with a listing agreement with another agent. And if that happens, it's unscrupulous. Anybody can come in and undercut. It's not the point. You signed on with somebody, and hasn't happened to me, but I've seen it happen a couple different times already. Agents right now, desperate agents will do desperate things. So just please be careful. And not all of them. I'm telling you, out of the 18,000 that are out there, there's going to be 2 or 3 that do it. So just be very careful. But they are out there. Talked about that. November 10th, which is also the Marine Corps birthday. Hang on a sec. Keep getting messages. It's also the Marine Corps' birthday. Happy birthday, Marines. November 10th is the CPI announcement. They're going to announce that it's just under 10%. Europe just announced that they're at 10.7. Remember, we're talking about why we're raising the interest rates. It's to slow down the inflation. It's to slow down the economy to make sure that kind of stuff happens. This right here, this guy right here seems to think that prices are going to go down. And that's very possible in certain areas, right? I think that the Silicon Valley, by the way, I have a new tag called @SiliconValley on YouTube, @SiliconValleyLiving.com. So please feel free to use that. He goes through a whole reason. His name is George Gammon. By all means, take a look at him. He's very widely known. He has over almost 500,000 subscribers. I wish I could have 100,000 subscribers, by the way, if you want. Please subscribe. But he's talking about why the market might crash. I invite you to watch it. You're very welcome to do it. I'd like to hear your thoughts and comments and your opinions. I think that the market will crash in certain areas. I think unemployment is going to be one of the big things that hits this economy, and we're already seeing it happen. I know a lot of recruiters that are no longer recruiting. I know a lot of people that are not buying because they fear for their job. So right now, cash is king. They're saving up just in case they get laid off, because you never know, right? Are they going to float to the top? Maybe, but that's what it is, right? Gas profits. Say shame on them, but I'm a capitalist. I don't think they needed to gouge the people, but what they're doing is they're saying I'm shoring up what I can for right now because they're trying to take away my supper. And this is what happens when you threaten a whole industry as a policymaker and you don't think about the long-term effects. So am I angry about it? Yeah, but you know what? I can't really blame them because they have to worry about their paying their people, right? Again, Open Door lays off 18% of their workers. That's crazy. If you work for Open Door, you're getting laid off, give me a call. I'll hire you in a heartbeat. I'll just lay that out there right now. Okay, 11/2. Today's November 2nd. We have 435 homes in San Jose. Oh, Hector, just hang on a second. All right, just be patient. It keeps texting me and it keeps coming down on my camera. Because I don't have my typical my little webcam, I'm using my phone and he keeps texting me. So 435. So on the average, we're kind of like we're about the same. Nothing's really changed. Over the last 6 months or so, our running average is 560. So we're far further down than what we saw over the last few months. Active homes per square mile is 2.5. That doesn't sound right, but it is because there's a lot of green space and mountains and hills that are not being developed. We don't want to do that. But also means that number, based on the population, there's less than half of a home available for sale per 1,000 people. Right? When you go down to Cape Coral, it's 16 homes, almost 17 homes for sale per 1,000 people. That's mostly because there's snowbirds there. They're not full time. The actual population is probably twice that during the summer months or whenever they go down. The winter, because they're snowbirds, I guess that would make sense. So there you go. Average days on market is 30. Last year it was 15. These are the running averages, right? So on average, we're seeing 23 days on market this year. Last year, and this is San Jose, last year it was 13. So we were at a much higher clip. Last year we had 116 closes. This year we only had 59, roughly 50%, right? And this is the running average right here. Pendings, we still have homes selling. Let me take a quick break here on why this number is important. People are still buying homes. Not at the same clip as last year or the year before, but if you look at 2019, these numbers are about relatively the same. And I was looking for the presentation that my office manager brought. I just didn't find it, so I'll bring it next week. But people are buying homes. People are moving into the area, and instead of renting, they're buying. Or if they're renting and they're getting kicked out for whatever reason, hey, I'm going to sell my condo, I'm going to sell my townhouse, I'm going to sell whatever, need you guys to move out. Those people, those renters, those tenants can either continue to rent and find something else and pay a whole lot more money because rent now is really expensive, or they can figure out how to buy a home. And you absolutely can. Hector's chomping at the bits to jump on and talk to us about that, and we're going to talk about it in a minute, okay? But yes, you absolutely, if you're a renter and you're looking at getting not evicted, but your tenancy is being terminated, we have an opportunity for you. There's a lot of options, and people are buying homes, guys, at all ranges. Okay, so we're down 50% of transactions from last year, but the year before, a little bit better. TFTs, 19. List price decrease. I think this is a running average. This is everything that's been decreased of all the active homes out of the 435. It's 131, so roughly 30% of them, which is actually a good thing because you see homes go do a list price decrease after about 15, 20 days, which means there's still a consumption of new homes going into contract, which is these 47, right? This isn't all of Santa Clara. This is San Jose based on a specific format that I've always looked at. And then, guys, look, all these red ones are all decreasing, meaning homes are being sold or they're being taken off market or what have you, right? But homes are actually going down in numbers for a majority of these metropolitan areas. So what does that tell you? Even at 7%, people are buying houses, right? Don't be afraid of the interest rates. Where is that? This right here. I'm not buying a home, 7%. Well, if you're renting, you're just throwing that money away, and you're not building equity in your legacy, your equity in your home. We're not building an equity, or you're not building your value as a homeowner. All right, let me see if I can grab Hector real quick. Now, this isn't something I always do. Go here. All right, Hector, get your butt on the market. Oh, yeah. What was I? See, 2013, 2003 is when I got my 2000, December 13th, 2003. So December 13th, 2023 will be 20 years. So next in December, it'll be 19 years I've been in the business. Oh, yeah, another thing. Where is it? This right here. We're starting to do a seminar program, and it's going to be live. It'll be recorded eventually, but we're just still trying to figure this out. We understand that you need to know people, you need to have tools, you need to have a bunch of different tools to build your legacy, to build equity in your home. Let me check to see if Hector's on yet. Nope, not yet. Okay, I'm going to bring this over. There. That way. Well, of course I lose it, right? Hmm. Oh, there you are. Okay. There. All right. I don't know why we're doing that, but okay, let's just bring this over. We're creating a seminar called Financial Intelligence. And yes, it has everything to do with buying houses, and it has everything to do with understanding loans and financial advisors, but also learning how to live below your means, right? Not everybody's Zuckerberg or Amazon guys, whatever. So understand that the whole facet of what this process is understanding what you should do, giving you ideas, not telling you everything you should do, but also giving you ideas so you can become more educated on the process. And this isn't just for professionals, this is for children to learn the process of budgeting and saving and living for tomorrow versus living for today, putting away, and also legacy, creating a trust. working with lawyers that understand the process, working with financial advisors to help you understand what today is and how to save for tomorrow and how to enjoy tomorrow. So let me get this out of here. I don't like the way this is set up. There, I'm going to move this back over here because Hector doesn't want to show up. Of course, look. All right, there we go. So you can probably see that now, right? Understand banking a little bit more. I have people that work for different banks. We're going to invite and have a discussion and teach you insider secrets on, or hacks on, how to be a better banking customer or how to become your own bank, that kind of stuff. Protecting your identity, know the basics, investing wisely, setting up legal entities, how to have a side hustle. I have a side hustle. Everybody should have a side hustle unless you're Zuckerberg or Bezos. There you go. There's the name I was thinking. That kind of thing. If you're interested in learning more, we're going to teach you how to make your tribe and work with your tribe and prosper from your tribe. Guys, billionaires do this, millionaires do this. There's no reason why you shouldn't have this, right? Getting the basics. And why do we do this type of stuff? It's because we want you to understand, get rid of that. We want you to understand what the basics are so that when you become a millionaire or very wealthy, then you can use us as your trusted team. That's the whole purpose, right? 1 out of 100,000 or 1,000 of you will become, independently wealthy. That's the whole potential. We're trying to do that all the way up, right? Talk about life insurance, talk about investing in stocks and crypto. I just met with a bunch of guys on Friday. We're talking about all this amazing, amazing, amazing stuff that we're going to do with saving money, making you money, and generating generational wealth for you. So that's that. All right. What else do we got? I think that's it. Yeah. See, I didn't even run those numbers today. I should have. So, anywho, this took me less than 30 minutes. I'm getting really fast at this. This is good. All right. If you have any questions, comments, you think I'm totally out of the water on this, let me know. Please send us comments. Please ask questions. If you're interested in a financial intelligence seminar, let us know. This is going to be really fun, and I'm going to enjoy doing it with so many different people and helping them become independently wealthy. That's the whole point, guys. Let's do this together. I'm Vito Scarnecchia with the Abitano Group, powered by Compass. We'll see you out there.